Good evening. It's 9 p.m. here in South Korea. Thank you for joining us on Arirang News. Responding to the dramatic collapse of Silicon Valley Bank, the U.S. government decides to step in to guarantee all deposits at the bank. Experts forecast this to be different from the 2008 financial crisis, but still, eyes are on any possible impact. Our economic correspondent Shin Ha-young starts us off.
On Sunday, in response to the fallout of tech-heavy lender Silicon Valley Bank, the U.S. government announced that all deposits at SVB will be available on Monday. Also included in the emergency measure is another failed institution, Signature Bank, a popular funding source for cryptocurrency companies. Plus, in a separate measure to strengthen public confidence in the banking system, the Federal Reserve announced that it will create a new lending facility for the nation's banks. Regarding the matter, Treasury Secretary Janet Yellen said on Sunday that a bailout of SVB is not on the table, citing improved resiliency in the U.S. banking system. Meanwhile, experts say the collapse of SVB, the largest bank failure since 2008, is different from the 2008 financial crisis. This is because in the case of the bankruptcy of Lehman Brothers, which was caused by the drop in U.S. real estate prices, risk in financial system was high because the derivative products tied to subprime mortgages were so complicated that even the government and Wall Street could not figure out some of them. However, there are still concerns over the impact of the recent fallout on the global economy.
Even though the possibility is not that high, there is still a chance of a global financial crisis. Also, the recent bank run can raise economic uncertainty, accelerating the global economic slowdown.
The effect of the collapse of SVB on the Fed's next rate hike is another issue to follow because the collapse was in part caused by the Fed's aggressive monetary tightening, which resulted in a decline of government bond prices.
Other banks seem to be able to handle the lower government bond prices, and right now there does not seem to be any large number of bank runs happening in other banks, and inflation is still very, very high. So the FOMC will probably raise the interest rate when they meet in late March.
He added that it's a question, though, whether the FOMC will raise rates by 25 basis points or 50 basis points, but he said this strengthens the case for a smaller increase. Meanwhile, President Biden said he is firmly committed to holding those responsible for the crisis accountable. And he said deliver speech on Monday on ways to strengthen soundness in the banking sector. Shin Ha-young, Arirang News.